Let's bring another perspective as well. Sreesankar, Head Institutional Equities at Prabhudas, Lilladher also joining in today. Sri, thanks for taking the time out to talk to us. What's it looking like when we talk about the way the markets are shaping up, and how are you advising clients to look at the markets going forward?
See, our thought process has been that market probably should range towards the 8,800 levels, and that range is still intact. I don't think that anything negative has happened. That's number one. Number two, corporate earnings was not expected to be pretty good, and the result so far has been in line with their expectations. But what has surprised is a lot of investors in the institutional side probably has been pretty negative on the IT pack. But the IT Infosys, a kind of strong beat it has given to the in earnings, and what Cognizance has come back and given a guidance and in terms of what their expectation is, probably will result in the funds which have been underweight IT moving to neutral weight in IT, or even going overweight in IT. And so you'll see a lot of portfolio reallocation or rebalancing happening in certain cases, and which will be reflected in the performance of the IT pack to a great extent. So I think that's where the big change is happening. Third is we are also seeing more number of retail investors coming into the party. So when they come in, it's going to be the mid caps and the smaller caps that will be rallying. And so you look at strange names in this entire pack, and you see a large number of stocks breaching a new high and getting more and more active. And once you start to see that, you probably will even start hearing about new reasoning for why these stocks should reach into a pretty high. So from a mid-cap pack, I think one needs to be exercising a caution. A small to mid-cap pack, I don't think that frenzy have reached the large cap to that extent, because large cap people tend to see that, okay, it's basically an institutional stock. You're not expecting to see probably more than 20% return or 15 to 20% return in a year. But in mid caps, people are expecting to see a higher return. So the volatility is highly increasing in the mid caps, or rather the small to mid caps.
Fair enough. But are there any specific themes within that pocket that you would be looking at, Sri, or you'd focus on specific stocks?
See, we had gone into a neutral weight from an overweight position in pharma because valuations had got stretched. So in hindsight, looks like a good call, basically because you have seen many of these stocks actually correcting itself for various reasons, be it Lupin, be it Sun. Everyone had its own reasons to correct itself. So you probably had at the same time in the sector, and we had gone and said overweight financials, and we continue to have one overweight sector, that's financials. So financials in the private sector banks is a preferred theme. So we continue to have the private sector banks outperforming, and you see that given what is happening around in the PSU banking space, whether it is a recapitalization, etc., our best estimate is that's going to be a trading story. So valuations comes down quite a lot, and people look at the kind of valuations that the private sector banks are there, and then come back and say that this huge differentiation or differential in valuation between the private sector banks and public sector banks is not required. So you see public sector banks getting some bit of an interest, and once it gains 10-15%, then it's back to square one, because worries about the next quarter increasing slippages or stress on the assets comes in, and then stocks corrects. So this is the theme that we have been seeing for last few quarters, and I don't think it's going to change in a hurry. So if we adhere to that call that we like the financials, that's a first call in terms of any economic recovery. The big benefits going to be there, and that's where we are.
All right. Fair. You know, the other space out here is today's been Tata Steel as well. They seem to be having some bit of issue with one of their mines in Jharkhand, where the iron ore dispatch seem to be shut, is what we're seeing. From the Noamundi mine has stopped, is what we understand. Any thoughts, Sri, when we talk about Tata Steel is down almost 1.6, and no doubt the global factors also a point of worry out here when we talk about the steel industry. But specifically on these news developments, any thoughts?
I'll have to verify with my analyst and get back. But on a much more broader space on the steel and the global commodity space, we are not advising investors to get into the global commodity space yet. And global commodity space, whether it is steel, aluminum, etc., will continue to be determined by what's happening in the global commodity prices side. So there is no indication that things are going to recover in a hurry, and you're going to see the global commodity prices back on their track. So if that's the case, we can't come back and even have an estimate, guess an estimate in terms of where that earnings are going to be. On the contrary, valuations may look attractive in terms of price to book, etc., which was historically pretty high. It has now come down, and probably investors will start looking into some of these companies should these stocks correct again in the sector. That's across the steel, aluminum, you name it, you have it.
Shri, I also want to just focus on some of these hotel stocks. They're all buzzing today. We've got Indian Hotels up 3%. We've got Hotel Leela, which is also up about 6 to 7%. Even a Brigade Realty play, but also, of course, has a larger hospitality business, is up about 8 to 9% right now. It's a space we haven't actually seen too much activity in of late. But, given the kind of up move we're seeing today, any call on any of these stocks?
Not at all. We don't track the hotel stocks in an active manner. But given that what's happening around in that 5-star chains, there has been a surplus inventory which has been happening around, or rather new keys which have been there in the industry. And some of these companies, like Leela, has been leveraged to the hilt. So there is a problem with one particular environment of high leverage and inability to raise the room rates, resulting in the revenue per available room remaining static or much more on the lower side, not giving enough kicker to it. So the return ratios looks extremely poor in these kind of cases. I don't think that you have seen anything significant probably to change that thought process. So on the hospitality industry, it's going to be the guys who have got probably more number of properties on the management contract model, probably who's going to be there at a much better wicket, rather than the hotels which is owning a large number of properties on their own, and who have been investing in the last few years in owning the properties. They'll still find it going a bit tough. That's number one. On the other side, on real estate, again, we don't actively cover this sector. The amount of inventories that is there in the system is a bit is telling you to be a bit cautious about the entire sector. Whether you're going to see a large amount of capex going to be there, or a large amount of new projects going to come up, and what's going to be the return these things are going to come. So I think it's going to be more regional specific in regional markets, depending upon where the demand is.
Sure. So Shri, let me take that a little bit more from a broader point of view as well. Are you a little concerned in terms of the way the mid-cap rally has been panning out? Because I've been asking, all our participants this morning as to what they make of this entire rally that we've seen in the mid-cap space. Because somewhere it's giving you that little bit of sign of overheating. Today also, as we speak, the index is pretty muted. Are you a little cautious now, especially in light of what's happened in the last couple of days with the mid-cap index also hitting fresh life highs? Is it time to turn a little cautious, or you believe this rally can continue further?
See, if you ask me whether the rally can continue further, I mean, historically we have seen that the rally will continue, and you cannot stop that rally, and you can't put a number to that rally and say that this is now overpriced, probably one should sell. No, the rally will continue further. Now the next question is whether you are turning cautious, more cautious at this. Answer is yes, definitely yes. because whenever you start seeing more and more number of people probably speak about new valuation metrics, some company which is producing in manufacturing something suddenly says that someone is coming and telling me, Sri, you need to look into these stocks because it has got so much of land, they are developing it, they will get 300 crores, 500 crores of cash flow over the next 5 years. All looks good. We know in the last infrastructure cycle, all probably the 20-year cash flow was discounted in year one. And then we have seen the stocks lying at 20% of the market cap where it reached. So a similar tendency is beginning to happen out here even now. So I think choosing your stock is going to be extremely difficult, or rather, it's going to be the winning mantra for it. But what will happen? There is a large number of investors. There is a large number of stocks. You will continue to see these kind of rumors going around, news going around, news floating around, and you will see the market going up as long as the liquidity is good. So I think this liquidity rally in the mid caps will continue as long as the liquidity remains easy. So the rally will continue, and you will probably see more stocks in this nature coming up as well.
3 point taken there. Thanks so much for joining in, and thanks so much for sharing your thoughts and perspective on the market sectors as well as the mid cap space, which has clearly been a big focus today.